BlackRock warns inflation will persist above the Fed's 2% target in coming years, though demand has weakened. Today's the first day of trading in the new year. Market action was quite interesting. When the market opened this morning, long bonds TLT was up more than 2%. Dollar index DXY was up 1%. Oil and stocks are both opened higher too. They all rallied a bit, giving investors hope. And then stocks and oil both sold off later in the day. Natural gas was down more than 10% in the first day of 2023. All of these are deflationary vibes. They are selling down Tesla and Apple because of the weak demand. But at the same time, they put that Apple money right back to Meta, Amazon, and Google. As all of these rest of fangs were up today, so did a lot of Dow value stocks. It is a lot of mixed signals, but will inflation persist above the Fed's 2% target in coming years? What's the reason Warren Buffett still owns oil stocks as inflation has peaked? I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get it into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? Markets are being rocked by the biggest macro storm in decades. And investors need to brace themselves for volatility and persistent inflation in 2023. Last year's shocks were extreme, causing sharp stock and bond sell-offs, pointing to factors like Russia's war on Ukraine, ongoing supply chain issues, and hawkish central bankers in the face of rising inflation. Those headwinds hammered stocks in 2022, with the S&P 500 posting its worst loss since 2008. Some market bulls are optimistic about a recovery as inflation cools and the Fed eases up on its rate hikes. But stocks are still dealing with the storm of macro pressures, strategists warned. The conditions call for 3 investment lessons for the new year. First, widen the lens of possible scenarios and beware of inertia and other behavioral biases, BlackRock said. Second, factor in compensation for geopolitical risk. Third, we need a new investment playbook, the key theme of our 2023 global outlook. That means more frequent portfolio changes in the new regime of greater macro and market volatility. Investors hoping for the Fed to pull back on rate hikes are also likely to be disappointed, as central bankers won't step in to buoy stocks. BlackRock predicted that while inflation will keep cooling as spending patterns normalize and energy prices back off, It will persist above the Fed's 2% target in coming years. We see stock rallies built on hopes for rapid rate hikes fizzling. Why? Central bankers raised rates an aggressive 425 basis points to rein in inflation, which cooled to 7.1% in November. Central banks are unlikely to come to the rescue in recessions they themselves cause to bring inflation down to policy targets. Fed officials are waiting for the release of the November jobs report on Wednesday to guide their next policy move, but Powell has already signaled the central bank will keep monetary policy restrictive through 2023, with plans to hike rates to 5.1%. A rate that high could easily over-tighten the economy into a recession. Experts say BlackRock previously warned that a recession was already in the cards, although that hasn't been fully priced into corporate earnings. For instance, Apple's weakness in 2022 has officially spilled over into 2023, with the stock kicking the year off with a 4% decline. Tuesday's sell-off wiped out $85 billion in market value for Apple and sent the iPhone maker below the $2 trillion valuation threshold for the first time since May. Apple was the last company to hold onto such a high valuation, with Microsoft falling below that level early last year. Apple first topped $2 trillion in August 2022 as the lockdown supercharged its product sales due to work-from-home trends. Sales of its laptop saw a significant boost, while its iPhone also helped generate record revenues. The valuation ultimately hit a high of about $3 trillion when stocks peaked on January 3rd, 2022. But now Apple, according to a Monday report from Nikkei, is seeing weaker demand, specifically for its MacBooks, AirPods, and Apple Watch. Apple has alerted us to lower orders for almost all product lines, actually since the quarter ending December, partly because the demand is not that strong. A manager at an Apple supplier told Nikkei Asia, Apple has already seen weakness due to wide-ranging infections in China, leading to reduced output from factories that make its all-important iPhone. The reduced manufacturing output led to significant lead times for customers to get their hands on the popular iPhone Pro models in time for the holidays last month. Apple's 4% drop on Tuesday outpaced the S&P 500's decline of about 0.6%. The only mega-cap tech stock that fell more than Apple on Tuesday was Tesla, which is down more than 12% on light fourth quarter deliveries. Tesla delivered 405,278 vehicles in the fourth quarter. That was a new record, but it was far short of analyst estimates of 431,117. For the year, Tesla drivers rose by 40%, missing Musk's 50% annual target. New year, same sell-off. Tesla Incorporated shares started 2023 where they left off last year, plunging more than 14% on Tuesday on growing worries about weakening demand and logistical problems that have hampered deliveries for the world's most valuable automaker. Demand overall is starting to crack a bit for Tesla, and the company will need to adjust and cut prices, more especially in China, which remains the key to the growth story. Tesla is offering hefty discounts there as well as a subsidy for insurance costs. Since 2017, Tesla has made $5.1 billion from the sale of regulatory carbon credit. The credits sold help other automakers meet their emissions regulations and bypass billions in fines. Though it's common practice for the other automakers to buy carbon credits from Tesla to offset their emissions, it's not a sustainable strategy. To meet stricter regulatory mandates worldwide, an industry-wide shift to EVs is crucial. If electric cars are the future, why Warren Buffett owns so many oil and gas giants? One investor who won big last year was billionaire Warren Buffett, as his Berkshire Hathaway built a substantial stake throughout 2022. In the S&P 500's best performer, Occidental Petroleum, up more than 100%. Buffett also owns a stake in Chevron, which was the 17th best S&P 500 performer in 2022, with a gain of about 50%. The energy sector finished the year up 56%. Making it only one to print positive gains for the year of 2022. Meanwhile, about 70% of S&P 500 companies logged negative returns, making it all the more impressive for energy stocks to post such massive gains. The reason why Buffett's still holding so many oil stocks as because, like Burry said, inflation could easily come back after this recession because we still haven't solved the energy issue or changed the energy policy. Not until nuclear fusion is online. Oil and gas are still all we got. In my 2 cents, inflation will be wiped out by demand destruction, as we are going to see negative CPI prints in the second half of this year. And this is my client Teddy Eazzy's book, Wicked Pussy Perfume. It is an erotic novel, such an amazing book. And the collaboration book with all my clients, it's already yours, Adversity Equals Success. Such an awesome book. You are such a good boy for watching my video right till the end. Bye.